everybody, it's Neil. Last quarter was difficult. August and September losses made them the worst months for the market in years. Most people expected a correction of 10% or more would come along sooner or later, but this drop came in like a hurricane, making it really tough. The market dropped 10% in just the last 2 weeks of September alone. What's behind this market decline? Well, there are two emotions that fuel changes in the stock market over the short term: fear and greed. Right now, fear has the upper hand. What are people afraid of? Well, China is getting most of the world's negative attention right now as its economy slows and its transparency comes under a lot of scrutiny. On top of that, investors are worried about interest rate changes, strong dollar, slowing consumption, corporate earnings, and energy prices. Let's talk for a minute about oil. In the last 12 months, the price of a barrel of oil has dropped from $85 a barrel to less than $45. What's interesting is that lower energy prices usually are a good thing for the economy, but the market doesn't see it that way this time. Why? Well, because oil prices dropped so much and so quickly, the companies involved in energy production and supplying companies in the oil industry have seen their earnings evaporate. And the suddenness of this price collapse caused a tidal wave of fear. As a result of those dramatic earning declines, it's weighed down the S&P as a whole. And the S&P companies' earnings are expected to decline 3.7% this quarter, mostly because of the steep decline in energy. And keep in mind that if you take out the energy companies, the S&P earnings actually increased. But that didn't help the companies' share prices avoid the correction, of course. But it is worth taking into account. Now let's look at interest rates for a minute. While investors typically cheer interest rate declines, the market reacted negatively in September when the Fed announced that it would not raise rates. To me, that says that the market wanted the Fed to raise rates. Why would that happen? Well, had they done so, it would have signaled that the Fed thinks our economy is indeed advancing on solid ground. And since the Fed didn't raise rates, investors get worried about the strength of our recovery. That worry and uncertainty brought share prices down. And of course, the Fed could raise rates before 2015 ends. And if rates are raised, it could help the market find firmer ground. So there's a lot of dark clouds that are getting people and investors worried. But as dark as that sounds, it's not all doom and gloom, far from it. Our economy grew at an annual clip of 3.9% last quarter. That's pretty good. And that's more than the government estimated. How did it happen? Consumers spent more, home construction was up almost 10%, and despite the mightier dollar, our exports increased more than 5% last quarter. That's impressive, as I said. And on top of that, consumer sentiment surged in September, housing prices remain in an uptrend, and employment continues to expand. These are all strong positives. What about going forward? My sense is that we're not looking at a bear market. We could be, of course. You and I can't predict the future. But I don't think that's the case right now. And I say that based on economic data I've shared with you before. But of course, even that could change. And there's something more to think about. We're long-term investors. As a result, we have to accept that sooner or later we will have to deal with a bear market. Huge drops like those we went through together in 2008 are really rare when you look at the history of the market. But declines of 15 to 25% have historically happened once or twice a decade. Right now, for the year, we're down 8.5% on the S&P. It feels worse than that because we dropped 10% in the last 2 weeks alone. But we have to have perspective. And as I said, since the beginning of the year, we're down 8.5%. And we have to be ready and prepared for declines in the market. What I'm doing now, as you know, I review our holdings and upgrade on a monthly basis or more if required. Up until now, our funds have performed really well compared to the overall market. Now, of course, they've lost ground recently, but they've held up better than the averages. If any of our funds fail this test, if they fail to perform strongly, I'll flag it to be sold. Usually when I sell a fund, I replace it immediately. But in situations like these, I'll hold proceeds rather than reinvest unless and until the market shows it's really on firmer ground. Obviously, if that happens, I'll let you know about it. Nobody likes seeing their account values decline as a result of dips, corrections, crashes, or bear markets. It's only natural that during such times, some people want to bail out. As you know, I believe there are good times to sell, but when people sell purely from an emotional place, they often stay out of the market far too long, and they would have been better off writing it out. As a matter of fact, CNBC did a study on this point. They looked at a hypothetical investor who put money into the market at the very worst time, right before each market correction or crash since 1974. That's pretty bad luck. Anyway, it turns out that even this person with the worst luck and the worst timing did better off than the person who kept money out of the market over that period. This is not to say that we should ignore the market. We shouldn't, and we don't. It's just that there is so much more volatility in the market these days. It's worked out better to ride out many of the storms. Again, depending on the situation, this could change, and if so, I'll let you know. It's been a really difficult couple of months. Fortunately, we're not investing for just a couple of months, but for a lifetime. And as you know, my goal is to manage your money so you can achieve your most important life goals. Sometimes that involves short-term pain. I apologize for that, but it's unavoidable. I'm convinced that the strategy I'm using both for your money and my own money continues to be the right way to go. Now, if you have any questions or concerns, call me. Let me know. Let's talk. And please feel free to share this video with your friends and family. Encourage them to let me know if they have any questions that I can answer. Until I see you again, I wish you and your family all the best. Thank you for your time.